Today, we are talking about the EURUSD as it pulls back following Friday's breakout. So I'll share my thoughts on where this market could be headed this week and also the dollar rebound that we're seeing so far today. So right now, guys, the EURUSD is pulling back following the breakout that we saw on Friday. So what we talked about last week was the fact that the market had broken back above 112 and 112.75, and also the fact that we had the market breaking out of this short-term descending channel. Now, it's not the cleanest channel. It's not, it doesn't have the most touches on either side of this. However, you can see that off of these lows down here, if you take a parallel level off of those, you get this high up here, and you can see that right through here, this was resistance. Friday broke out. It's now support. Now, what we talked about on Friday as well was this area around 114.25. So you can see these highs back here. This is exactly where the market is pulling back so far this week. Okay, so we had a U.S. holiday yesterday, and markets are a little bit sleepy here so far. Even though we are seeing some decent movement out there across the board, for the most part, these markets still remain very sideways. So you've got to be careful out there. And what we tend to see in markets like this is you can see that down here, if we go all the way out to these highs from this range that we've talked about, right? If we go to something like a 3-day time frame, you can see that we had these highs back here. And what we got so far was a sweep of these, highs back here into this range, filling the imbalance down there at 110.60. And now we've seen the move back above that Friday breakout. Okay, so what you've got to be careful of in markets like this, when they tend to go sideways, is that you often see a sweep to one side of the range, followed by a sweep of the opposite side of the range. So although we don't have confirmation yet, and this goes back to the way that I trade, this is not a high probability setup right now. I've got to stress that. But if we were to see this area down here fail over the coming days, that, in my opinion, would be a great setup here for the euro, because it would indicate that the market has failed to break out here and also swept the liquidity above these highs over here, right? We got that sweep, and then we could get that push lower down here into some of these pockets down here. Now, again, this is not high probability right now. There is no short here on the euro, because the fact is the market broke out last week, and this is going to be key support right around 112.75. Okay, so you've got to respect what's on the chart. And the reason I keep talking about a short, guys, just to explain here, if you look at the breakout back here in March, okay, this was a very aggressive breakout following this consolidation. And what you'll notice here is that we got a very shallow retrace. Now, these big green candles back here, where we saw literally no retrace into the previous candle, these right here are imbalances in the market. What you tend to see is a market pulling back and filling these over time. Now, it doesn't have to happen. It doesn't have to happen right now. We could see the euro continue to rally for weeks or even months before it ever comes back here. But whenever I see something like this right here becomes a potential target, or a magnet, as I call it, down here in this area. However, in order for that to be a magnet, you need a trigger. You need a technical setup here from the EURUSD to target this area. Because as of right now, this is just an imbalance down here. It's not a target yet. The only way it would become a target is if we saw areas like this up here fail this week, okay? Because this would become a failed breakout. Then you get that move down here into some of these pockets, okay? So that's what I'm looking at right now. But again, we have to respect what is on the chart. And what's on the chart right now for the euro is the market broke out on Friday, and we have it coming into support down here around 112.75 this week. Now, another factor is going to be the DXY that we've talked about recently. So looking at the DXY, right, we have the market coming off of this area around 99. I mentioned this over the weekend as well in the forecast video, right? You can see that we've got these lows back here, and this is why I said you've got to be careful early this week, because even though we saw the DXY close below this area up here around 100.2 last week, you had the market coming into this pocket down here at the end of last week, okay? So you had to be careful if you were trying to get short the US dollar through here, because you had these lows back here around 99, so we knew that some type of reaction from there was likely. Now, this has been a pretty aggressive reaction here so far today, and so far, although it could change, we are seeing the market kind of stick here a little bit. In other words, we're not seeing it sell off, following the retest of these lows back here. A lot of times in previous days, what we've seen, even this candle here, we saw a decent rally up here toward 100.2, and then we saw a sell-off toward the end of the day. Now, that could change because we do still have several hours left in this candle. Okay, so we'll see how the market closes today. But this could be the start of at least a short-term bottom. Now, the key for the DXY, okay, and I haven't looked at this yet, but you can see that off of these highs back here, we've got, a couple of trend lines that come into play. However, what I would watch into today's close is really these lows back here, are these lows down here in this area, right? If we see the market closing back above these and holding above these over the coming days, that could be enough to take the DXY back here toward resistance around 100.2. Now, the thing is, you've got to keep in mind too that the euro, right, which is essentially the inverse of the DXY, is coming down here toward the top of its channel, down here in this area, in 112.75. So this is going to be support for the euro. And then if we look at the DXY, we've got resistance up there around 100.2. Okay, so this entire pocket back here, all right? So that's what I'm looking at so far this week. As of now, guys, we have the DXY holding below resistance, the euro above support. So we have to go with what's on the chart. But like I mentioned last week, guys, I would, personally, my ideal setup, and this does not mean that it's likely right now. It doesn't mean that I'm longing the US dollar because I'm not. But my ideal setup would be for the DXY to finally break this trend line right here. Okay, break this trend line and give us a move up here toward this area. And the reason for this is very similar to what we discussed on the euro, because aggressive moves like this create imbalances in the market where you've got that open liquidity up here. We never saw a retest through this area. So I would love to see the market put in a higher low down here, give us that move above here, and then give us that rally up here towards some of these higher targets. Okay, it doesn't mean that it will happen, but that would be my ideal scenario from a risk reward standpoint. And also, again, I love targeting areas like this in the market. But first, we need that trigger, that technical trigger, which for the DXY would be that move above 100.2. Okay, so as of right now, not a whole lot to do here in these markets with them still sideways. And really, again, for the euro, if you take a look here at the 4-hour, this could also give you a little bit of an early indication here because this upper level, okay, off of this channel, you can see we've got this high up here. We've got these lows down here in this area. We've got this low. And then notice what happened last week. The market never closed above it through here. We got the Friday breakout. Okay, so the market is approaching that support area, like I mentioned. But if we see the euro start to close below here on the high time frames, that could indicate a false breakout or a failed breakout, which could set up that short opportunity. But for now, guys, this is going to be support. So the last thing you want to do is try to short this market into support. Okay, again, it's just my opinion, but you don't typically want to be trying to short here because you've got this confluence of support down here for the euro. Okay. So get below here. I think we've got a short on our hands, but for now, this is going to be a critical support area for the euro, just like the 100.2 area up here is going to be a critical resistance for the DXY. Be sure to subscribe to the channel, smash the like button, and stick around for more because I'll be back tomorrow.